The U.S. housing market in 2025 is at a crossroads. Will we see a massive boom, or is a bust just around the corner? Home prices have surged over the past few years, mortgage rates are higher than a decade ago, and buyers are navigating a tricky landscape. Whether you're looking to buy, invest, or rent, understanding the trends now could make or break your financial future. Visual cue: clips of homes, for sale signs, mortgage rate charts, news headlines. Let's start with the current state of the market. The median U.S. home price sits around $420,000, up roughly 5% year-over-year. Mortgage rates for a 30-year fixed loan have climbed to around 7%, significantly affecting affordability. Inventory is tight with just a 2.5-month supply of homes, far below the 6-month benchmark for a balanced market. Meanwhile, rents continue to rise, keeping rental properties attractive for investors. This combination of high demand and limited supply is driving a complex dynamic, where some markets remain hot while others start to slow down. Visual cue: graph showing median home prices, mortgage rates, and inventory trends. Now let's look at why 2025 could be a boom year. First, supply is still low. Builders haven't caught up with demand, creating competition among buyers. Second, Millennials and Gen Z are entering peak home buying age, adding millions of potential buyers to the market. Third, remote work continues to reshape housing patterns. Many are leaving expensive city centers for affordable suburbs and smaller towns, fueling suburban growth. Finally, investors are actively purchasing rental properties, keeping demand strong and sustaining prices in key markets. Suburbs and secondary cities are seeing record price growth, and this trend could continue through the year. Visual cue: map highlighting hot suburban and secondary city markets, young families touring homes. However, the market isn't without risk. High mortgage rates make monthly payments steep, discouraging first-time buyers. Inflation and rising living costs reduce disposable income, slowing potential purchases. Certain urban markets such as New York, San Francisco, and Miami may have peaked, creating the risk of price corrections. Economic uncertainty, layoffs, and stock market volatility add to the caution. Buyers in these overheated cities need to be extra careful, as overvalued homes could lead to losses if a correction occurs. Visual cue: headlines of mortgage rate increases, empty urban apartments, slow-selling homes. Experts are divided on what 2025 holds. Goldman Sachs predicts moderate national growth of 2 to 3%, indicating overall stability. Zillow warns that some high-cost urban markets could see declines of 5 to 10%. The takeaway is simple: while some areas may cool, suburbs and smaller cities are likely to thrive. Understanding these regional differences is crucial for anyone looking to buy, sell, or invest this year. Visual cue: logos of Zillow, Goldman Sachs. Overlay graphs showing forecasted growth versus decline. So, what opportunities exist in this mixed market? Suburban and secondary cities offer strong potential for long-term growth. Rental properties remain a reliable hedge against inflation, with demand and rents on the rise. For those who prefer less direct involvement, real estate investment trusts, or REITs, provide a way to invest in property without owning it. Even distressed or undervalued homes in high-growth regions can be profitable for investors who do their research and act strategically. Visual cue: clips of rental properties, REIT logos, suburban homes. So, will the U.S. housing market boom or bust in 2025? The truth is, it's a mix. Suburbs and smaller cities show promise for growth, while overheated urban markets carry risk. Success will depend on location, timing, and strategy. Stay informed, choose wisely, and you can turn this challenging market into a powerful opportunity. Comment below with your prediction. Will 2025 be a boom or bust?